Hi everyone. Let's take stock of where we are. We have our job cost sheet and we have learned how to trace our easy costs or the direct materials and the direct labor directly onto that sheet using the source documents, the materials requisition form, the labor time ticket, and right now our job cost sheet for job 101 might show $300 in direct materials, 4 hours in direct labor that cost us $120. We have also looked at some of the other indirect costs that we can't directly trace to this table. So we know we're not done. What about all of the other costs? What about the glue, the screws, the sandpaper, the salary of the factory supervisor? What about the factory's electric bill and rent? These are all manufacturing overhead. And we did see an example of where that goes down here when we actually use something for the general factory as a whole, like our electricity or the glue. They are real costs of making that table. We wouldn't be making very many tables if we turned the electricity off in the factory. So we know the electricity is part of the cost of the table. We just can't directly trace it to the table. So how do we fix this? So we must put a portion of the cost on the job cost sheet to know our true cost. But so far, we have left that column blank. We have two massive problems in trying to do this. The first problem is how much exactly of the factory's $2,000 electric bill did this job use? Or how many cents worth of glue did it take? How many minutes of the supervisor's time did this one table take? It's impossible, or at least totally impractical, to trace these costs directly to the table. Again, we talked about tracing glue to the table. We don't want to fill out a requisition form and make the accountant put in 3 cents worth of glue on the table. So we're not going to do that. We call those indirect costs. So the second problem is even bigger. We have a timing issue. Let's say we finish the table for our customer on January 15th. The customer is standing right there waiting for the final bill. And we need to know the total cost right now. Usually, we don't know the electric bill until the end of the month, or we don't know the depreciation on the factory equipment until the end of the year. But we need to know the cost right now, and right now our bucket for manufacturing overhead is empty. We don't know the total cost. So we can't wait for the actual bills to come in. The job is finished, the customer is waiting, we are stuck. We need to get this moving going forward. So this isn't just a textbook problem, it is the problem that managerial accounting has to solve. We need information right now because we need to make decisions right now. So let's go back to that entrepreneurship conference that was held on campus last week. There was a landscaper and a painter on the panel that said job costing was vital for their success. Why? Because they know how to track their direct materials. That's easy, right? The landscaper knows how many plants and paving stones he used on the miller's backyard patio. They also know how to track direct labor. That's easy too. So the painter knows his crew worked 40 hours on that one job of painting a living room. The reason they are successful is not because they were able to trace the easy things. It's because they know how to account for the overhead. All of the gas in the trucks, the depreciation on the expensive mowers, the business insurance, the salary of the person back in the office scheduling the jobs. All of these things are overhead that we somehow have to allocate to all the jobs so that we figure it into our pricing. And we can't wait until the end of the year to see how much that actually was because we need to price our products today, not at the end of the year. So we need to give them a price. We need to be able to cost our jobs so that we are guaranteed a profit and not just maybe we made a profit. All right, so the solution is we must estimate. If we don't know the actual cost right now, we can't wait for the actual cost. We need to know right now how much we think it's going to cost us. So at the beginning of the year, long before any jobs are started, the accountant sits down with probably managers and the owner and entrepreneur, and they create what is called a predetermined overhead rate. It's a predetermined rate, meaning we calculate it in advance. It's going to be estimated. It's not going to be exact, but it should help us be able to price our jobs and our products accurately so that we know we are making a profit. So let's go take a look at this formula. So let's break down both parts of this formula. The numerator is the total estimated overhead costs. So how do we estimate this? At the beginning of the year, we look at last year's bills and we say, all right, last year we spent $100,000 on factory rent. Let's go ahead and write that down. So we spent $100,000 on factory rent. We also spent $50,000 on supervisor salaries. The supervisors don't build our tables for us, but they are integral to the process. So that's indirect labor. We also spent $30,000 on utilities, like that electricity. That, yes, we know our table used electricity, we just don't know exactly how much. So last year it looks like we spent $100,000 or $180,000 total on overhead. Now we also might say, well, yeah, that was last year. What about this year? Again, this is an estimate for the coming year, not what we spent last year. So we might say, well, prices have gone up a little bit. So for this coming year, let's say we're probably going to spend $200,000 on all of this stuff, the rent, the salaries, the utilities, the glue, the screws, all of that little stuff that we can't trace directly to a job. So we say, all right, there's $200,000. And then we have to say, all right, how much we need to be able to divide this up between all of the jobs this year. And we are going to divide this by an allocation base. And we have to figure out how are we going to divide this up between the jobs. We have this $200,000. And we need to divide it up to the jobs based on what? The two most common allocation bases are direct labor hours, like how many hours do we think we're going to spend building tables, or machine hours. For example, if our tables were built by machines and not by, hand built by people, we might say, well, how many hours is our machine going to be running? So how do we choose between the two? So we might, again, say direct labor hours or machine hours. And it really depends on, well, what does our business use? If it is labor intensive, then we're probably going to use direct labor hours. However, if it's machine intensive, we're going to look more at how long is our machine running rather than how many hours are our employees working. So an example of the direct labor hours would be the landscaping. It would be the painting. Those are very labor-intensive activities. Building handcrafted tables, that's very labor-intensive. How about an artist when they're creating a painting? That is labor-intensive. However, if you're a bottling plant or an auto assembly line, the more important thing is how long is your machine running. So we would probably use machine hours in that case. So for our custom furniture shop, we are probably going to be using the direct labor hours to estimate. So at the beginning of the year, we have already estimated we have $200,000 of overhead that we're probably going to spend this year. And we look at our plans and estimate our employees will work a total of 20,000 direct labor hours. So we look at this and say, yep, our employees will probably spend 20,000 hours this year working on tables. And this is the direct labor. So directly working on tables, probably going to be 20,000 hours, which would give us an estimated rate of $10 per hour, per direct labor hour that they are spending on this. And so that's our magic number for the whole year. I want to emphasize this is not going to be exact. We'll have to deal with, well, what if things are different at the end of the year? But for now, for the coming year, we are going to use $10 of overhead per direct labor hour. So for every hour that Jane, our woodworker, spends on any job, we will apply an additional $10 of overhead to that job's cost sheet to cover the rent, glue, and electricity. So let's just go back to our job cost sheet and see how this is applied. Again, we have calculated an estimated rate of $10 per hour. We are done with this table, and all we have to do is now apply the manufacturing overhead, saying, all right, we spent 4 hours, or Jane spent 4 hours on this table. Our overhead rate says it's $10 per direct labor hour. We need to add another $40 onto this table to cover the glue, to cover the electricity and the rent and the insurance. So that's this table cost us an extra $40. We can't directly trace it to the table, but it probably used up approximately $40 worth of other stuff that we can't trace. All right, and what is then the journal entry to put that $40 from the overhead into the table? So that is going to be another journal entry where we are moving it from manufacturing overhead. Remember, right here we put it into manufacturing overhead. We are going to take that $40 out of manufacturing overhead. So we have to credit that and put it into our work in process. Job 101. So now, if we look at all of our journal entries and we look at the ledger for Job 101, it should be exactly the same as what ends up on our job cost sheet at this point. And now that the table is done, we have accounted for all of the direct materials, the direct labor, did our manufacturing overhead application. We can now add all of this up. So 300 plus 120 is 420, plus 40 is $460 is the total cost of that table. So we're sitting here with our client saying, all right, this, and we're trying to price it. We built this table. We can probably, we need to, of course, price this over 460 or we're going to lose money. So we might say we're going to sell this table for $600. And so custom oak table, and this job costing method, now that is complete, we say, all right, we know exactly how much this table cost us to make. This is how much we have to sell it for to make a profit. All right, so that is the entire process. Again, the magic number here is the predetermined overhead allocation rate. And this is an estimate. We're just saying how much do we think we're going to spend on all of this stuff during the year? How much in direct labor hours are we going to use? And we're going to use just say, all right, it's $10 per hour that our workers spend on this table. And if they spend 4 hours on the table, we'll just add $40 onto the price of the table. And since this is an estimate, it's not going to be exact. In another video, we are going to look at, well, what happens when our estimates are off, which they will be. So at the end of the year, we look at it and say, you know what, some things were off. What do we do with that extra money? Or maybe we didn't have enough in there. Whatever it is, what do we do with it?